Welcome traders. It's definitely that time once again to make some updates and to see what kind of trading opportunities lies ahead of us and how we can capitalize on these potential opportunities. But before we go into the analysis, I'd like to apologize for not being able to make updates in the last couple of days. It's been as a result of very tight schedule, but we do hope that going forward we can be more consistent with our webinar updates on this channel. As usual, we try to keep these videos as educational as possible, and I've been getting some feedbacks from a few of you out there. And some of the feedbacks I got was that these videos are a bit too advanced, and the concepts are a bit too advanced for you out there. But I think the summary is that a few of you out there are already good traders, while some of you are newbies. So I'll try and break down these concepts and these theories and make them as simple as possible so that you can understand them better. So before we go into the analysis, first of all, the risk disclaimer explains that trading foreign exchange and the global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor, and this webinar is for educational purposes only. Now, we are about to analyze Litecoin, LTCUSD, but right now we are looking at the monthly time frame. And why do we want to analyze LTCUSD? Because we could see some potential moves on LTCUSD in the next couple of days and possibly the next couple of weeks. Now, first thing first is we can see that Litecoin has been moving upwards impulsively here. Now, for those of you who don't understand what analysis is all about, first of all, the markets move in a certain way. We do have uptrends, which is by definition this is an uptrend, which means the market is making higher highs and higher lows. Higher highs, this is a high here, this is a high here, this is a high here, and then this is a low here, this is a low here. So these are higher highs and higher lows, and by definition this is what an uptrend is. So now that the market has made this impulse to the upside, no market moves in a straight line like this forever. There's got to be some potential, there've got to be some retracements for the market to grab some more liquidity before the continuation to the upside. So after an uptrend, we do expect at some point in time for the markets to make some retracements to a certain level before the possible continuation of the uptrend. So from the monthly perspective of the LTC USD, we are expecting some retracements at some point in time on this pair to grab some liquidity, possibly before the continuation to the upside. Again, now going down into the weekly time frame, what do we see? Now from the weekly time frame, everything looks a bit clearer now. We can see how that the market has been making this nice impulse pullback or impulse correction, another impulse, then correction, and now we are getting another impulse again to the upside. So as I had earlier said, this is the definition of an uptrend, where we have these higher highs here, higher highs here, higher highs here, and higher lows. So this is an uptrend. Now so if we want to measure a correction after the uptrend, what we can do is to take our Fibonacci from the high of the impulse to from the low of the impulse to the high of the impulse, and this was the last impulse we had, and then we had a correction to the 61.8 Fibonacci level here. Now Fibonacci is a tool that we use in measuring correction of the market. We also use Fibonacci to find entry points and exit points as well. So I've drawn the Fibonacci from the low of this impulse to the high of this impulse, and that gave us our correction, and that showed us that this market had actually retraced even down to the 61.8 retracement level before it started all this move again to the upside. Now I had earlier said that when a market makes an impulse and a correction, we want the market to make another impulse again to the upside. So now that we have this impulse and this correction, we do expect the market to make another impulse to the upside to create a higher high. Now, where would be your possible targets for the next impulse is measured through the Fibonacci, and we usually take our first target is usually the -272 Fibonacci level, and usually the -414 doesn't usually quite a number of people don't use this one, but significant Fibonacci levels are the -272 Fibonacci level and the -618 Fibonacci level. So we can see from -272 that we have a target of 282 here, and at the -618 all the way at 327. Not so sure if the price can get to that level, but what we do know is that we have an impulse from here, we have a correction, and possibly we should be getting ready for another impulse to the downside. So this is the situation. We've been able to use the Fibonacci to see these retracement levels here and possible target areas if we do find an entry point by the time we move to lower time frames. Now let's go into the daily time frame and see the situation from a daily perspective. Now from a daily perspective, I'd like to show you something here. What we do have here, recently we had this pattern here which I want to show you quickly. Now we had this the creation of this what we call a symmetrical triangle. Now of course it might take a while for you to begin to find out about different chart patterns, but a symmetrical triangle is usually defined as the creation of lower highs and higher lows. So we can see the lower highs here. This low was this high was lower than this one, and then this high here was lower than this one. So this high here was also this low here was higher than this low here was higher than this one here. Let me take that again. This high here is actually lower than this high here. This high here is actually lower than this one here. Now this low here is actually higher than this one here. So this is what we call lower highs and higher lows. And when you have a situation like that, this now leads to the creation of this kind of pattern here. And when something like this happens, the market continues to contract inside this symmetrical triangle until it breaks out of either to the upside or to the downside. And in this situation, we did get a break to the upside. So now that we've gotten the break to the upside, what's the next thing? Now quickly, I'd like to show you that we had this structure here. This was one structure here, and we had another structure here because this was the previous high here, and we have another structure here. This was the previous high. And guys, as you know, after we do have what we call resistance points and support points. Now resistance is an area where sell orders are clustered, and support is an area where buy orders are clustered. So this area acted as this area acted as resistance in the past. Now when this area was a resistance area, and you can see how price made its way to the downside. This area also acted as resistance and found its way to the downside. Now that price has broken above, this area now should now act as support for the next continuation to the upside. So we are expecting some impulse to the upside, possibly for the creation of this impulse correction and another impulse to the upside. Now one more thing I haven't mentioned here is that when you do have a symmetrical triangle, after the break to either the downside or the upside, the impulse is usually the height of the symmetrical triangle. Now let me say that again. After the break, this is the break. Now we got a break to the upside in this case. Sometimes we'll get a break to the downside. Now I'm saying that when you get a breakout out of the triangle, out of the symmetrical triangle, the impulse, when I say the impulse, I'm talking about the move to the upside, is usually the height of this symmetrical triangle. Now what that means is that I'm going to show you the height of this symmetrical triangle here. The height started from here and ended here. So this is actually the height of the symmetrical triangle, which is about 934. So what that means is that there is a potential we can possibly get a potential move to the upside, which could actually also be the height of this symmetrical triangle. So from here we do expect a move all the way. If we calculate 934, about 934, just about that. So this is actually the potential move to the upside that we could get, it's potential. And just quick one, now that we've gotten this break, we should be expecting a pullback to this area here, and then here will now be where we'll be looking to go in for our trade, possibly for all the way to this Fibonacci level here.